Welcome back to Factful Finance, where we break down complex financial topics and give you the tools to make empowered, informed decisions about your money. Now, here's a tough question for you. What if I told you that millions of homeowners are unknowingly walking into a financial trap that could cost them their homes and their futures? We're talking about home equity release, a financial option that can sound like a lifeline, but for many it's a ticking time bomb. And today, in part 3 of our deep dive into home equity release, we're going to uncover how it's often missold to vulnerable homeowners, particularly retirees. Home equity release is sold as a way to unlock cash from your property, allowing you to stay in your home while accessing the funds you need for retirement. Sounds appealing, right? But here's the catch. It can be one of the most irreversible decisions of your life, and it's often sold to those who don't fully understand the risks or the true costs involved. But how is it missold? Let's take a closer look. For many, the appeal of home equity release lies in its simplicity. You take out a loan against the value of your home, and instead of paying it back monthly, the loan and interest are repaid when you die or move into long-term care. The problem arises when people aren't given the full picture. Imagine this. Alan, a 70-year-old retiree with a modest home in the suburbs, is approached by a friendly advisor. He's told that a lifetime mortgage will help him unlock much-needed cash to supplement his pension. But what Alan doesn't realise is that by taking out this loan, he's essentially signing away the value of his home and potentially leaving his family with nothing when he passes. One of the biggest issues here is how these products are often pitched. Home equity release advisors aren't always forthcoming about the true costs. They focus on the immediate benefit, getting cash in hand, without properly explaining how the interest on these loans compounds over time. In some cases, retirees are led to believe that this will have little to no impact on their long-term financial security. But in reality, the amount owed can double or even triple over the course of just a few years. For example, if Alan takes out £50,000 today and the interest is compounded at 6% in 10 years, that loan could balloon to £90,000, far more than he originally expected. Lack of full disclosure. Another issue is the lack of clear disclosure on the potential downsides. Let's say that Alan's children were planning to inherit the house. With home equity release, the outstanding loan will be repaid when Alan dies, likely taking a significant portion of the property's value. The house may be sold off to settle the debt, leaving little or nothing for his heirs. In some instances, homeowners are not even informed that there are alternatives available, such as downsizing or accessing government assistance programs that might be less risky or more financially sustainable in the long run. There's the subtle pressure that some homeowners face. Sales tactics can sometimes border on coercion, where individuals feel they have no choice but to agree. Vulnerable retirees, especially those in poor health, may be more likely to succumb to these sales tactics, fearing they won't have enough money to live comfortably in their later years. What's worse is that many of these products don't even provide the level of flexibility that people are led to believe. Some may not allow for early repayment without steep penalties. So even if Alan wanted to pay off the loan early, he could be faced with large fees that defeat the purpose of securing that additional financial flexibility in the first place. The impact on future generations. The other major factor to consider is the long-term impact on family finances. Home equity release is marketed to retirees, but it doesn't just affect them, it can also impact their children, grandchildren, and other heirs. A home is often a family's largest asset, and when it's sold off to pay for an equity release loan, future generations miss out on what could be a substantial inheritance. We've seen many cases where children inherit nothing after their parents take out these loans. Sarah, for example, recently lost her mother to illness. Her mother had taken out a home equity loan without fully understanding the ramifications. When Sarah's mother passed away, the family home was sold off to repay the debt, leaving Sarah with nothing but a mountain of regret and frustration. The legal risks? Finally, let's talk about the legal risks. While equity release is regulated, not all advisors follow the rules or give the necessary advice to ensure that clients are making a fully informed decision. If a homeowner is not provided with adequate legal advice or is misled about the long-term consequences, they may have grounds for a lawsuit. The UK Financial Ombudsman has received an increasing number of complaints regarding home equity release, with many people citing that they were not made aware of the full risks involved. If you feel like you've been missold a home equity release plan, you may be entitled to compensation, but the process is long, complicated, and stressful. The bottom line, at the end of the day, the mis-selling of home equity release products is an issue of fairness, transparency, and consumer protection. If you're a retiree considering this option, make sure you speak with an independent financial advisor, not one tied to a product provider. Do thorough research, ask for comparisons to other financial solutions, and make sure that you understand the full terms, including how much you will owe in 5, 10, or 20 years' time. Your home is likely your most valuable asset. Don't let a lack of understanding turn it into a financial burden for you or your loved ones. If you found this information useful, please drop a comment below. Tell me what's your biggest concern when it comes to retirement planning. I'm here to help you navigate through it. And if you haven't already, hit that like button and subscribe for more in-depth financial insights. Remember, this content is for educational purposes only. Always consult a certified financial professional for personalised advice tailored to your individual situation. And if you want to learn even more about avoiding financial traps, click the next video on screen to continue your journey toward financial freedom.